Hello, welcome to Chapter 6, Using Credit. Learning objectives include describe the reasons for using consumer credit and identify its benefits and problems. Develop a plan to establish a strong credit history. Distinguish among the different forms of credit account. Open credit, excuse me. Distinguish among the different forms of open account credit. Apply for, obtain, manage open forms of credit. Choose the right credit cards and recognize their advantages and disadvantages. Avoid credit problems, protect yourself against credit card fraud, protect yourself against identity theft, and understand the personal bankruptcy process. How it affected me. The ability to borrow funds to buy goods and services is as convenient as it is seductive. It is important to understand how to get and maintain access to credit via credit cards, debit cards, lines of credit, and other means. This chapter reviews the common sources of consumer credit and provides a framework for choosing among them. So there's some facts and fantasies. So the basic concept of credit, why we use credit: avoid paying cash for large outlays, meet a financial emergency, convenience, investment purposes. Also, there's little chance of anyone being able to afford a house without being able to get a mortgage. You can get a used car, but it's very difficult to purchase a new car with cash. Not that it's impossible, but it's just difficult. Improper uses of credit: meet basic living expenses, make impulse purchases, purchase non-durable goods. A durable good is a good that lasts for 3 or more years. It's supposed to last 3 or more years. Non-durable good is a good that's used up in less than 3 years. Consistently paying only minimum payments. It'll take years and years and years if all you do is make minimum payments, because all you're doing is paying the interest and just a little bit above that. Okay, rule of thumb: product should outlive the payment schedule. Okay, so this is extremely difficult when it comes to new cars, because right now they're doing 8 and 9 year loans on new cars. So it is extremely difficult to get a vehicle that is going to outlive the payments on it, the loan on it, if you get the maximum term. And the reason you would do that is try to get the lowest payments. Okay? So it would be better to have higher payments and a shorter term, so that you can be finished paying it and the car is still worth something, as opposed to keep on making payments even though the car is in constant need of repair. Minimum payments mean maximum years. Original balance 5,000, years to repay 61.4 years. Interest is 34.34, and total interest paid as a percentage of the original balance 68.6%. Then you have $3,000 and then $1,000. Establish credit. Build a good credit history by not getting overextended, fulfilling all credit terms, paying on time, notify creditors if unable to pay, being truthful. Actions to take: open a checking and savings account, get a card and make a small purchase. Best thing to do is to get a credit card that's either a Visa or MasterCard. Whatever the balance is, whatever the credit limit is, always stay below 30% of that credit, and always make very large payments on it. You don't always have to get down to zero, but it should be pretty close to zero every month after you make the payment. So if you have a credit limit of $1,000, you should never exceed $300, and you should always be making payments that are 80 to 95% of the balance, so that you can have an excellent credit history. Debit cards do not build your credit. Installment loans don't do a whole lot except hurt your credit if you don't make them on time, but they don't do much to build your credit history. Credit cards are the ones that build the history the most. Okay, and they can also hurt you the most if you don't do it correctly. So again, keep it under 30% of the credit limit and pay almost all, if not the entire balance every month, and then just make the purchases that are small purchases each month so that you can have a history. Okay? The easiest way to do it is only use it for gasoline and then pay it off when you get the statement. Because you have to buy gasoline regardless to put in your vehicle, or diesel, whatever kind of vehicle you have. And so since you have to have it, it's just as easy to do it on a credit card. And very few people charge much gasoline each month. So it's a way to keep the balance low, and then you just pay it off when you get the bill and go from there. The 5 C's of credit: character, capacity, collateral, capital, and condition. How much credit can you stand? Debt safety ratio equals monthly consumer credit payments divided by monthly take-home pay. Monthly consumer credit payments excluding mortgage should not exceed 20% of monthly income. Goal is 15%. Many students exceed that by far just because of student loans. Credit card and other open account credit. Credit extended to consumers prior to a purchase. Consumer can buy up to a specific credit limit offered by retailers and financial institutions. Monthly credit statements pay balance in full to avoid interest. Merchandise credit cards and finance options are usually not good for your credit, like Kohl's or furniture or appliance stores that are 90 days same as cash, or 6 months same as cash, or 6 months until your first payment, because most of those use finance companies, and then if you don't pay it off by a certain time, the amount of interest that you owe is incredibly high. And they also are not favorable on your credit report. So it is better to not use Kohl's or JCPenney card, or any of the appliance or furniture stores, same as cash deals. It's better just to use a Visa or MasterCard or Discover, and then keep even Macy's is not good as far as your credit's concerned. Bank credit cards, what I just said. Other fees, watch the fees. Some of those credit cards can have $100, $150 fee. They offer you a $500 credit limit, and the first $250 goes to pay all their fees. Special types of bank credit cards: reward cards, affinity cards, secured collateralized credit cards, student credit cards, retail charge cards, which is what I just had said, and debit cards. Debit cards don't do anything for your credit as far as good. Now, you keep overdrafting your account, and they'll do bad things to your credit, but they don't do anything good for your credit. Prepaid cards don't do anything unless it's a secured Visa or MasterCard. But if it's just a debit prepaid card, it doesn't do anything. And there's revolving lines of credit, which means it runs much like a credit card, only it's through a bank. You can write checks on it, or just use it to transfer funds. And there's overdraft protection, unsecured personal credit lines, home equity credit lines, which are tied to your real estate, to your house. They used to be very good because they'd have lower rates than a credit card, and you could deduct the interest on your taxes. But I don't believe you're able to deduct the interest on your taxes anymore. So the benefits of home equity are dwindling. Obtaining and managing open forms of credit, credit card application, credit investigation, credit bureau, credit scoring, which is your FICO score. FICO scores payment history is 35%. Amounts owed is 30%. Length of credit history is 15%. New credit 10%. Types of credit used is 10%. So this types of credit used is what I was saying as far as not being good to do the 90-day same as cash, or the Macy's or Kohl's cards, because they're not looked upon favorably. New credit, applying for new credit. Like if you went to apply for a car loan at the car dealership, many times they'll ship your application to 4 or 5 different banks, and so all of a sudden you've got 4 or 5 inquiries on your credit, and drop your credit score up to 10% because of all those inquiries. And those inquiries stay on your credit bureau for 2 years. So those inquiries will hurt you for up to 2 years. Okay, amount owed, again, that's what I was saying, to keep it under 30%. Under 15% is even better, but under 30% is the rule of thumb. And of course, payment history. You would think payment history would be the most important thing, and it is, but not by a lot. Only by 5% more than the amount owed. Okay. Credit scores range from 300 to 850. Average varies by age, income, state. Overall average about 700. Except here in Ada, the average is right around 659, 660, right around there. That's the average FICO score in Ada. If you have a FICO of 760 to 850, you could obtain a mortgage rate of 4%. No, you could obtain a mortgage rate of 3.25% if you had a FICO score that high, if your debt ratio was low enough. FICO score of 620 to 639, yeah, you're looking at 5 or 6% for a mortgage with a FICO score that low. And it takes years to recover, many years to recover if you get a low FICO score. Truth in Lending Act, lenders must disclose the annual percentage rate, a true rate of interest over the life of the loan, and all the fees. Now, they don't have to do it in very big font. See how small this font is? It can be smaller than that, but they can say they had it on there, so you have to look very close to make sure you know exactly what it is. Computing finance charges, average daily balance, excluding new purchases, or including new purchases. A lot of them will say it's from day one when you make a new purchase that they're going to start charging you interest. And then here's your balance and calculation and all that. And you can see how it can add up very, very quickly as far as you borrowed very little, but you're paying back a huge amount. Managing your credit cards, review statements monthly to verify entries, paid by due date, enter amount to avoid finance charges, entire amount to avoid finance charges, minimum monthly payments, try to pay more than that. You shouldn't have that many credit cards. 2 or 3 credit cards is really all you should have. And then type of credit cards, and then the average rate. Avoiding credit card problems, use discipline when purchasing it. Following your budget, again, that's what I said about using it just for gasoline. You can't put more gas in the car than the gas tank. So if you use it for just gasoline, you'll be fine. Be selective in accepting pre-approved credit cards. Only take the ones that are going to help you. Either they have 0% interest for the first 12 months or 3% cash back or something like that for everything that you purchase. Don't give account numbers. As far as be very careful about who gets your account number. Destroy your old cards and shred statements. Report lost or stolen cards immediately. I had a charge on my account from California, and I called my credit card immediately. Luckily, I saw it the day after it was charged, and they took it off. It was only $50, $60, something like that. But again, it could have been $500, and it could have really hurt my credit if I didn't find it. Okay, that's the end of credit cards. See you next chapter.